change direction as we head into spring of 2025 and share with you the questions that I'm being asked at my consultations throughout the week with prospective home buyers. Now, whether this is first-time buyers, people that already have owned and are buying again. So what I'm going to talk about today are the top 5 questions I was asked, some thoughts surrounding those topics, and then a tip at the end for you if you are in fact looking to buy a home this spring or summer relating to interest rates. So here we go. First one is often asked, when should I get pre-approved? I kind of answer this a little abstractly. And the reason why is that we as people do things differently. I can share with you that when the election was happening, I had my ballot ready weeks in advance in the mail because I just wanted it off my plate. Didn't want to be bothered anymore. Knew what I was going to decide. My wife dropped hers off the day that the boxes were closing on election day. So what I'm getting at there is when should you get pre-approved might come down to how do you best deal with projects and to-dos in your own life. It's not for me as the lender to say, if you're buying in 6 months, you should get pre-approved now. I will say, if you share with me in that consultation that there might be some credit concerns, etc., relating to the credit, I may want to look at the credit so that I can help you get the best rate 6 months down the road by hacking into your credit score. But once you get pre-approved, I think you got to look at yourself and say, when do I tackle projects? If you have something for work, when you were in college, when did you do things? Was it the last minute? Or is it something that you wanted done so you knew it was taken care of? I commonly see a lot of people will go more process oriented as it relates to getting a mortgage. I think because of what we're dealing with, a lot of people want that stuff done. Certainly does not hurt to get it done early. And then from there, follow your gut instinct, have conversations with the lender. Even if you decide to wait, go ahead and stay in communication with them. Use them. They should offer up to you to be available for questions. If they're only talking to you when you reach out to them, are they the best advocate for you knowing that you're getting a mortgage? Now, this might differentiate between if you're working with a mortgage broker, going to a retail bank. You might see different levels of service. You have to decide what's important to you about working with the lender that you're going to work with when getting a loan. So when should you get pre-approved? I think you know the answer to the question. If you're going to get in a car this weekend, of course, we know the answer is now, immediately. How long is the pre-approval good for? This is a common question that comes up. And really, we're starting with soft credit pulls here in my office these days. And the reason being twofold. One is if I do a hard pull, yes, there's an inquiry. Could it affect your score? That's a deep, broad topic that people have different opinions on. But as far as that goes, I would say typically the answer is no. The FICO system is built knowing that you might have multiple lenders pull your credit. Therefore, inquiries should not affect your credit score too much. But then if you leave that consultation and go apply for a visa, then for a car, then for some student loans, your score is going to be affected. Okay. So how long is a pre-approval good for? The documentation is really 120 days by standard. If we get to contract at day 90 and we have pay stubs from you from 90 days ago, we're going to be getting them before we submit to an underwriter. But getting cursory stuff up front, such as a pay stub, current, maybe your tax returns, depending on how you're paid, if you're self-employed, maybe some mortgage statements, etc., depending on, again, the robustness of your financial profile, might dictate that, in fact, we want to get that stuff earlier, but it is good for 120 days. And then from there, we should just refresh that at the time you go for contract. So that's the question there. 120 days. Pre-approval letters, mine are going to have 30 days on them, but it's as simple as the phone call. We're having the consultations. I am checking in. Good lenders are going to be checking in with you weekly, maybe every 2 weeks once you get pre-approved and you're out looking. On average, I'm seeing right now, it might be about 5 weeks from the time a pre-approval happens to the time a contract occurs. Of course, it is taking longer for some because there are more homes in the market. So as a buyer, you have a little bit more opportunity right now to make those decisions. As a mortgage broker, I get asked this next question, number 3. What does a broker do? That one was asked, I don't know, maybe 5 times this week. And not to get too far into the rabbit hole, but I'm going to break this apart real fast for you. In this world, you have options to get mortgages. If you're going to get a mortgage, you've got retail banks, your brick and mortar banks. You have mortgage banks. They are employed by that mortgage bank. Therefore, from underwriting all the way down to the loan officer, they're all employees of the mortgage bank. They're not depositories though, like a retail bank would be. So that's the difference between a mortgage bank and a retail bank. Mortgage bank will fund the loan. Everyone's an employee of that mortgage bank, though they may work with some of these retail banks to get you that mortgage. And it's not always the case that they will service your mortgage. As far as a loan being serviced from the beginning to the end of the time you have it, please be advised you will sign paperwork at closing. Your loan can be sold. So nobody can guarantee you the loan won't ever be sold because they're not the person that makes the final decision. You actually sign paperwork that says that they can, in fact, sell your loan after closing. So as far as that part of it goes, then you have mortgage brokers. What do we do? So I was a mortgage banker for over a decade. The broker side now going on 6 years. And on the broker side, I own this company, but I'm not employed by a mortgage bank. I'm not employed by those retail banks. As a broker, an independent mortgage broker is employed by you to find you the best deal, whether it be rate or closing costs for your specific deal. They have access to investors, lenders you cannot call to get a mortgage. Statistically speaking, it has been shown that brokers do save on interest rate and closing costs. Make sure you ask the questions, talk to them so that you get a really good deal. You should be treated fairly and get competitive rates and fees for your specific information. Be mindful about paying too close attention to what your friends, family have said, done, etc. Nobody has the same financial DNA, guys. Therefore, everyone's situation is going to be slightly different. But don't be afraid to bring up to a mortgage broker or a loan officer what you're hearing out there. If you have enough trust and confidence for them to help you get a mortgage and go into debt $400,000, $500,000, $600,000, you should have enough trust and confidence to ask them questions. Hey, I'm hearing about X, or my friend told me Y, or on this social media feed, I saw this. What can you tell me about that? And before you make any final decisions off of being led down another direction, talk to the person you trust. Therefore, they can give you answers and they're going to take care of you. They want you to be well served as well. So as a broker, we're going to look at different investors. And for me, at least how I do things, when I pre-approve somebody, I am looking at what the different investors' rates are, closing costs in that moment, etc. When you go to contract is when we're locking your rate. Therefore, at that time, that is when I am revisiting, my team and I are revisiting the market, the landscape. What are the investors doing now? Because just as Uber has surge pricing, we see times where different investors throw promotions out and their rates might be a little bit ahead of the market, but then they pull back because they can't just always take on new business. And so to that, I would say that is a great time. And that is where a strength of a mortgage broker will come in, is that they can do the shopping for you to save you the time if you choose to work with a broker. So hopefully that answers the questions. Do they have control? That's something that I've heard in the past. Oh, the brokers don't have any control. At the end of the day, the loan officer's knowledge is what's going to get your loan closed. It don't matter if they work for a retail bank, a mortgage bank, or are a mortgage broker. If they don't have the knowledge, you're going to have trouble and you're going to have stress. An experienced loan officer will take care of you regardless if they are a retail bank, mortgage bank, or mortgage broker. So to that, I just can't be bothered because your professional will yield the results for you, not so much whether they're in one channel or the other. But nowadays you can look them up online. I invite all prospective clients of mine to look us up because I can't fabricate the reviews on all these different channels, social, Google, Yelp, you name it, because if we were doing a bad job, it's going to get out there pretty fast these days. So do your research, do your diligence, ask questions, trust the broker, the lender, ask them what you're hearing about. So next question I've been asked a lot is, and this one came up with some confusion recently, which was, well, how is the pre-approval amount determined? And I learned from this that this person had gone through, they referenced institutions. I'm assuming they meant banks, retail banks, because they had actually just been told they're pre-approved, this is the amount. And as we got to the bottom of this conversation, I shared with them that at the end of the day, it's not about input number, output, pre-approval amount. Unfortunately, we live in a society and a culture where so often that is the case. But a good lender will take the time to understand your life situation. Do you have kids? Are you going to have kids? Are you married? Are you getting married? Are you going back to school? Your spouse going back to school? What's happening with your income trajectory over the next 3 to 5 years? Some of these are just basic instances of where your plan should be individualized for you, because at the end of the day, there is a difference about what we can afford and what we can qualify for. Now, sometimes they work in synergy. Sometimes you can afford a heck of a lot more. You just don't want to spend as much per month. Other times, there would be a need to qualify for more. The affordability doesn't work. So affordability is the difference of owning a home, but still putting food on the table, going on vacation, saving for retirement, saving for college for the kids, saving for whatever, investments, starting a business, whatever that's going to be, and still owning a home. Qualifying might yield, at the end of the day, you have regrets and you go on Reddit and you post what a mistake you made because now you can't afford it. That's not a lender that was looking out for you. So anybody should be looking out for you. As far as how it's determined, yes, there are specific debt ratios that the loan programs do abide by. That is 100% true, but affordability and qualification are 100% different things, and therefore it should be led with, well, how much can you afford? And let's build around that based on those other parameters that I just discussed regarding your financial picture overall. So it is unique to you and your profile overall. Affordability, that's a big one, right? What is your affordability? What things are kind of lurking in the bank statements in your budget that you're not even paying attention to? Can you cut some corners regarding streaming services, subscriptions? Are you spending a little bit too much eating out and you recognize that you're just not disciplined enough to not do it right now because you're on the go during the week with the kids going to activities? Do you take lunch out every day, whereas you could bring lunch some days? I tell people, look, if a difference of comfort is $100 a month in this day and age, if you skip lunch out on a weekend twice, you probably just made up that $100. So would you rather have a $20,000 more expensive home, or is going out to lunch that much more important to you? You just have to decide what matters to you in owning a home. But with this individual, whether it's a lender, broker, whoever it is, loan officer is a loan officer, have trust and confidence in them. Go to them, share with them. They're not the underwriter. We do not go to them to share with them what you've shared with us necessarily. But if you have questions about X, Y, or Z, bring that up to the loan officer because they probably have an answer for you. Don't be fearful of sharing. I only want my payment to be $2,300 because I'm going to go on maternity leave. Well, what does that mean, maternity leave? If you're going to go on maternity leave, actually the lending world knows it's okay because by law, you're allowed to do this. Therefore, it doesn't mean you should qualify for less unless after the fact, maybe you're not going to go back to work, and therefore that $2,300 a month payment is very important to maintain the affordability. So share in confidence, have trust with your lender as it relates to that to determine what is the affordable pre-approval amount to get you closed on your home. And let's end with, what is the direction of rates? So as I'm looking at the markets right now today, it's not good for mortgage rates. What is today? The 10th. What just happened? Jobs report came out. What does this show? More jobs than expected. What does this currently mean? It means that mortgage rates are actually being hampered negatively by this trend I've seen though. I said going into the end of the year that 8 out of the last 10 years, mortgage rates have gotten better this time of year. This now becomes 8 out of the last 11 because mortgage rates have gotten worse through the end of the year and to start the year as well. What will be the trend going forward? I would probably expect that we're going to continue to see this trend where mortgage rates are volatile and unstable. We have an administration checking in, checking out here in the next 2 weeks. There is a transition that's happening. There are plans for the first 100 days. This is not meant to be a political statement. It's just facts that there will be effects on the financial markets. If anybody told you what mortgage rates were going to be in June, they're wrong, just like they were in 22, 23, and 24, where many talking heads in my industry said rates are going to do this by here. Those individuals make a lot of money off loan officers, subscription-based models. Unfortunately, nobody can tell the future. So I just say, make sure it's the right time to buy a house. Have a cushion, some elasticity to how much you can afford in case rates did go up from the time you started thinking about it to the time you went under contract. Last thing you want to do is be cutting it so tight that you go under contract, rates went up 0.3%. Suddenly, it doesn't feel good anymore, except that that was the house you really wanted to buy. I will say this, if you are in the younger earning years of your life, you won't guarantee, but you will likely grow into that payment much more than you anticipate. This is advice that was shared to me from an accounting professor, and he owned quite a bit of land off I-25 between Denver and Fort Collins. I always tell people nowadays, you know what happened between Denver and Fort Collins in the early 2000s to now, you know that it probably worked out very well for his family. So I do trust what he said to me back in that accounting class, which was, you will likely grow into that payment much more than you think you will. The irony behind all that is I had no idea back during this time in the late 90s that I would end up being a mortgage professional. But that one instance of that class has stuck out to me, and I've seen clients grow into their payments time and time and time again. So plan deep, plan wise. You can have a successful search for your home. Hit me up with thoughts about what you would like me to cover. From now forward, once a week, I'll probably be popping in shorter than this, but with a few questions most asked as we go through these cycles of growing wealth through real estate. Be well. We'll talk to you soon. If you want to have a consultation, calendly.com/mortgage maestro.